Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 23rd of July. All right, coming to you sort of more at the end of the Asian session today. Just having a look where that US equity market's finished, pretty flat. Right, that tells me there's not much interest in that at the moment. But what is very interesting is check out the major currency pairs, all very uniform. The dollar pair's going down, Euro, Sterling, Aussie, Kiwi, all going up. This is as good as we've had it, I reckon, in the last 6 months, easy, right? This is because the dollar itself has got a clear downward projection, and that is making trading across the board very easy. Now, it's easy to pick off currencies when you have that clear direction. That's what the most important thing is. Now, Aussie continue to rallies, Kiwi, Euro, Sterling, got a few little hiccups here in Sterling. Don't forget, you've got that vaccine situation, whether that's because it's out of Europe, I don't know, or out of the UK, but these pairs should all continue high. Now, dollar yen is the one pair. That sort of safe haven, whole dilly-dally has completely diffused itself. It's back in the range. So I wouldn't worry too much about dollar yen, but the yen crosses, I mean, they've all screamed to the top side. Dollar CAD belting to the downside, as is dollar Swiss, right? So this is good. We've got clear dollar direction. Now, I can't re-emphasize enough, when you've got clear US dollar direction, it makes trading all the majors so much easier, right? Doesn't mean you just jump in here just sort of in the middle of nowhere, but you know, you've got the direction. Once that's the hardest part, right? If you know where it's going, then you can work out how to get in. Now, all I'm doing at the moment is there's no major change in the structure of the actual trades, but as far as your analysis goes, you're just having a look probably on their longer term charts, and you're starting to draw in these new support trend lines which are popping out of the current price movements, right? So don't get too overzealous. Like if you went into Euro here and you drew this one here, it's just so steep, right? So some of them don't make sense. Some of them do. Like Sterling, on the other hand, is not as crazy as Euro was or is on that trend line. So just drawing that on, and also dollar CAD. So this is basically so you can start to see where the next, if we do start to see some pullbacks, where are the pullbacks going to stop? And it's around these new trend lines that are forming, right? So that's the most important thing. If I just give you a quick flick across to the sort of general news, see what's happening around the traps. You've got like a few little things coming into play, and it's funny, right? So all the German stimulus and a few little bits and pieces don't impact for some time. But then once you get clear direction, say on Euro, and it's going up, the slightest bit of positive news will have a more profound move, right? That's the same on all those pairs. That China-US situation is due to escalate. I would expect, especially with this Hong Kong tussle, I know Australia, the UK, and a few other places have been pulled into this as far as cancelling extradition treaties with Hong Kong. It means basically if you're in trouble with China and you're from Hong Kong and Australia, you aren't getting sent back. So that's a positive for those people. So, you know, you've got, I think Donald shut down the Houston Chinese consulate. Hopefully that should escalate. That's what Donald's trying to do. But outside of that, it's just clear trading conditions. Now, if I just bring you back to the daily market insight, okay, now if I just scroll down here, we've got good conditions. Now, this is where, I've been saying it for ages, and I'm glad the markets are kicking in because I was starting to think I was losing my mind. But what you're looking for is market direction. When you've got market direction, it makes it easier. Then you can come and isolate the optimal entry points. Now, these pairs are all moving very nicely, short-term, longer-term charts. So that's it makes you confident to get into the trades. Now, for some of these trades, though, they have been going probably since the start of the week, right? These were put on Tuesday. And if Euro, I think it was last Thursday or Friday, right, where it was very clear that Euro was going up, the Aussie and Kiwi, it took a few extra days. So these levels here have all left, right? So your optimum entry levels here for those specific pairs, in my eyes, have changed, or haven't changed. They've, like, Euro's 100 points through, is it? Something like that. It's only still about 60. So you might get a retracement there on Euro, which it did yesterday. The Aussie's up at 71, 100 points through that, and I think the Kiwi is as well. So pretty hard to be getting into those trades. And that's why you need to be paying attention and focusing on your analysis each day, because when these currencies do line up, you get that one clear entry usually. You may have a secondary, but usually one real good one. You get in there and then you let it run. So that's what a lot of traders are doing at the moment. Now, as far as the data, I don't really think it's coming into play, but I tell you what, as I said with that German stimulus numbers, you get weakness here in the jobless claims, right? We've already got the dollar moving lower. It will have a more profound effect. You've got the consumer confidence and the GfK consumer confidence in the UK. Once again, positive numbers here should have a better move and should give you confidence to get into it, even if it's a short-term trade, because you're going with that direction. Now, weaker numbers here, it goes against the general momentum. So don't worry about that so much. Look for the numbers that do go with the direction, and that's where those easy trades are. All right, guys, this has been a pretty good week so far. So let's just see how it plays out. Japan holiday today. We've got a Japan holiday, I think, again tomorrow. Don't worry about that. The yen crosses will still move. It just means the major volume in the Asian market won't be there. Now, it's not going to stop the currencies from moving, but you do miss some liquidity. You know what? Thinner liquidity, bigger moves, potential. It's always on the cards. All right, guys, have a good trade day. All the very best. Cheerio.